Hello viewers, welcome to my channel Rohan Finverse. We all have heard the stories like Asian Paints has delivered about 7,000% return in last 15 years or 17 years. We also heard about stocks such as Pidilite Industries or Abbott India delivering huge returns and have created huge wealth for investors. You might wonder, how can I participate in such a phenomenal journey of these stocks over the period of time? Today I'm going to cover a simple strategy that will enable you to take an entry into these high growth stocks. It's a simple strategy. It doesn't work in all the stocks, but it works only in few stocks. Which are those stocks? I'll let you know. And you can also try to research on your own if the strategy fits well in other stocks. Let's quickly jump on to trading view and try to see what this strategy is all about. We have to consider weekly chart. So it doesn't work on daily or monthly, but it works only on weekly chart. I've considered Asian Paints. I'm going to add two indicators. Actually, it is only one indicator, but I'll be adding it twice. So I'm going to select moving average exponential. Moving average exponential, we also call it as EMA. It will help you identify the weighted average price of the stock over the recent time period. Let us not get into the mathematical calculation of it, but let's quickly look at how we can apply that on the chart and make an informed decision of investing in these high growth stocks. So I'm going to quickly change the settings to 89 days moving average. So from the default setting of 9, I'm going to make it as 89, and instead of close, I'm going to make it as high. And in the second indicator, again, I'm going to select 89 days moving average, but instead of close, I'm going to select low. So what we're trying to do here is we're trying to plot the weighted moving average of the stock over the period of 89 days based on the high and low, instead of the default one, which is open and close. As you can see, we have got this band. So this is a band that has got formed with this 89 EMA high and low. From the year 2009, this stock has respected this band. It has never gone below this band beyond a certain extent. So I'm going to tell you what rules you need to apply in order to take an entry. So you need to always wait for the stock to retrace till the 89-day high and low moving average band. So you should not buy the stock if it is away from this band. You should always wait for the stock to come near this band. Your entry has to be as near to this band as possible. Now let's look at the recent times when Asian Paints touched this band. So for instance, I think during the March 2022, the stock touched this 89 EMA band and it was trading at around 2760 odd levels. So if one had taken an entry over here, the stock went all the way till 3500 odd levels. That means you would have achieved a return of around 30% in a span of hardly few months, right? Now, what are the rules that you need to follow? You need to always wait for the retracement towards the 89 EMA band. The closer the price is to the 89 EMA band, the better it is. And once you take an entry over here, your stop loss should be 10% below the band. So for instance, if you have taken an entry at around 2700 odd levels, then your stop loss should be 10% below this level. That means around 2380 odd levels. So if the price closes below 2380 levels on a weekly closing basis, you need to exit from this stock. And the risk to reward ratio is very high over here, and you need to continue riding this trend So let's say if you have a very short term view of, let's say, 6 months or a year or a two, then you can book the profit based on the price action that I covered in my previous videos. But to take an entry into the stock, you can use this 89 EMA strategy, and you can look at this strategy historically. It has always respected this particular 89 EMA band. Whenever it touched 89 EMA band, it went up. Whenever it touched 89 EMA band, it went up. Only during this particular time, this stock went below 10% from the low of the 89 EMA band. Except this, it has never gone below this band. Now let's look at another example of Pidilite Industries. This stock has created wealth for many, and as you can see over here, this stock has been respecting this 89 EMA band from 2009. Every time it touched this 89 EMA band, it has gone up and it has given phenomenal returns. It has never closed 10% below this 89 EMA band. So if you're, let's say, in the recent times, in 2020 during COVID, if you had bought this stock at around 1200 odd levels by keeping a stop loss of 10%, you would have been able to make good money. So your stock would have double, literally double or more than double. Another example of this, another example wherein this strategy works is Abbott India, which is also one of the wealth creators. You can clearly see that it has always respected this 89 EMA band. Whenever it touched it, it went up. Whenever it touched it, it went up. So you need to wait for the price to retrace towards this band, and the more closer the price is, the better it is, and you can keep a stop loss of 10% and keep riding this trend. This is just one of the strategy that I follow. This strategy, as I mentioned, doesn't work in all the stocks, so please don't apply this on all the stocks. Please do a thorough research on which of these stocks it works on. I've given you three examples. One is Pidilite Industries, Asian Paints, and About India. I hope you found this video informative. Please hit the like button if you liked it. Thanks for watching.